This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, December 14th, 2015. Euro dollar. So right now we're in the throes of a correction in the euro with the market stalling out at 110.43 ahead of this latest minor consolidation. At this point, we're going to need to see a break back above 10.43 or below recent lows at 107.96 for clearer directional insight. A break above 110.43 would open the door for fresh upside and a continuation of this correction into the 112 area, while inability to take out 110.43 will suggest that a medium-term lower top is in place by this level in favor of the next downside extension back below 107.96. But again, we need to see a break below 107.96 to confirm a more immediate bearish resumption and acceleration back down towards recent 105.20 lows, below which exposes that March low at 104.60. Sterling dollar. So cable continues to make a series of lower tops and lower lows off the 2015 high at 159.30, and a fresh lower top is now sought out somewhere below the most recent lower top at 53.36 in favor of the next downside extension, which will be confirmed on a break below the recent low that we saw at 148.95, and below there will expose the 2015 low at 145.66 further down. At this point, only a break back above 153.36 would compromise the current downtrend in cable. Dollar yen. So some sharp setbacks in dollar yen in the previous week, with the market finally taking out a multi-day range, and the break below 122.20 has opened the door for an acceleration of declines, which could now open deeper setbacks in the coming sessions into the 119 to 120 area. At this point, any rally should continue to be very well capped ahead of that previous support, now turn resistance in the 122.20 area, while ultimately only back above 123.76 would compromise the newly adopted bearish outlook for dollar yen. Euro Swiss. So Euro Swiss has been consolidating over the past several months, though the consolidation is classified as a bullish consolidation given the recovery out from record lows earlier this year. At this point, an eventual upside extension is favored back above the September 110.50 peak, which would open the door for a move towards the 112 to 115 area further up, while ultimately only back below 107.14 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie continues to be very well capped into rallies, and the market is classified as within a bearish consolidation over the past several days, which eventually favors deeper setbacks back towards and eventually below the recent multi-year low just ahead of 69 going back to August. At this point, only back above 73.85 would compromise the bearish outlook for Aussie dollar. Dollar CAD. So dollar CAD continues with its surge after breaking above the previous September 11-year high at 134.57, with the break opening the move up towards and above 137 thus far. At this point, a fresh upside is now exposed towards the 140 area, while any setback should be very well supported ahead of that previous resistance now turned support in the 134.57 area. Ultimately, though, only back below 128.32 would really compromise the highly constructive outlook for dollar CAD. Kiwi dollar. So Kiwi has been well supported in recent trade, but while the market holds below that recent high that we saw up around the 69 area, the market remains confined to a broader downtrend and is expected to continue to be pressured to the downside in favor of an eventual retest back towards that August multi-year low in the 62 area. At this point, again, only back above 69 would compromise the bearish outlook for Kiwi. SPX 500. So the S&P 500 has accelerated to the downside in recent trade, but will need to take out key support at 2003 to confirm an acceleration of declines and open deeper setbacks back towards those lows that we saw at 1870 going back to September of 2015. At this point, though, a break back above 2117 would be required to put the pressure back on the top side and expose a retest of the record high from May at 2137. Gold. So gold is showing some signs of the potential base after putting in a multi-year low at 1046 several days back. And if the market can establish back above 1100, it will suggest that some form of an interim base is in place and could accelerate gains back towards 1192, those highs that we saw back in October of 2015. Again, the market will need to establish above 1100 to open the door for a significant bottom and acceleration of gains, while inability to do so will keep the pressure on the downside, potentially exposing a retest and break of 1046. Below 1046, of course, then exposes that critical psychological barrier at 1000 further down.